been meeting various investors recently, and there seems to be a high level of interest. Share with us the key takeaways from those investor meets. What has been the feedback you've received?
Well, I can talk about the business, not so much about the investors' interest, because that's part of their own take. But from the business perspective, as we had mentioned earlier, our first quarter was pretty good. Last year we did have an issue in our microfinance book when we had the demonetization impact. In few states like Maharashtra and Karnataka, we did have an impact, and we had to write off 142 crores we wrote off last year as a one-time measure to kind of put the impacted portfolio behind us. But subsequently the microfinance book has been performing very well, and consciously last year we had reduced our microfinance book from nearly 3,500 crores to 2,500 crores. And for the first time this quarter, first quarter of this financial year, microfinance grew by 6% sequentially. The other book has been going very well, and we had a overall 27% growth in the first quarter compared to last year first quarter. And PAT also was around 35 crores for the first quarter, which compares to 31 crores for the full year of last year because of the write-off and all that. So the first quarter was generally good, and the ROA was around 1% for the first quarter.
Oh yeah, Mr. Vasudevan, there's no denying the quality of your earnings that you've delivered in the quarter gone by. But tell me, what is it that you foresee in terms of an earnings expansion for the full year? And where do you think that scope of expansion, what do you think would be the key profit drivers eventually going forward?
See, like I had mentioned earlier also, this year we started with a 27% growth in advances in the first quarter, but we expect to end the year with around 40% plus growth. That 40% growth has to be put under two contexts. One is that our base is still very small. We are only a 9,000 crore advance book as of now, so the base is still not very large. Second thing is that the segments that we deal with, the segments to which we lend, we continue to see a significant level of demand and not enough supply. So a sustainable growth should be a possibility over a period of time. So that has to be put into that context. And in terms of our profit drivers going forward, you see we have a cost to income ratio. We went to a peak of 83% last year, which is from a cost to income ratio. First quarter that had come down to about 76%. We have invested significantly into our branch network and technology to take care of the growth for the next 2 years. Now the whole challenge in front of us is really leveraging that investment that we have already made. We have opened up 375 liability branches, and we already have around 500 asset branches. So overall about 875 branches we have, which is a pretty significant network of branches in terms of growth that we can pursue over the next 2 years or so. And technology also we have invested substantially, which will enable us to grow over the next 2 years or so. So the whole profit driver really, if you look at it, is in terms of how effectively we can leverage the investments that we have already made and ensure that we can grow the book with not too much of incremental cost expansion. And our cost to income from 83, which has come to 76, as that keeps dropping down, that is where the profitability should really be kicking in.
My next question to you is that you have two businesses. One is the microfinance business and second is the bank rollout business. Historically, the microfinance business has very good spreads. But when it comes to your bank business, what are the NIMs? And how are you planning to compete for CASA there? Because the liability in the market is limited. Suddenly there is Equitas, there is Vasudevan, the AU Financials, Kotak is taking CASA at 6%, Yes Bank is taking CASA at 6%. So how will you be able to maintain the spreads in your banking sector, because the cost of CASA is not going to come down in a hurry?
Yeah. So there are two aspects to that. First, if I talk of the liability, the CASA part of it, we have rolled out 375 branches, which is a very significant number of branch from any bank perspective. And so our spread is so good that our ability to mobilize deposits sustainably over a period of time should be very high. Second thing is that we have also shown a good level of traction because we are also offering 6% and 6.5% on savings account, which is an attraction from a client from a depositor perspective. And all our basic services are in place. So we are fully digital enabled, and customers don't have any difference, from a service perspective when they deal with me compared to any other bank. So basically, we have ensured that the customer service and customer experience is as good, if not better, than any other bank. And over the last 1.5 years that we have been a bank, we have mobilized deposits of 5,800 crores, which is 50% of our total borrowings now, the remaining being our grandfathered borrowings, which we will be repaying as they mature. And out of our deposit, CASA already is constituting around 32%. So we have shown a good level of traction in terms of both deposit and CASA mobilization. And the fact that we have a very strong network of branch is actually aiding us and enabling us to grow our deposit pretty comfortably. That's one on the deposit and CASA. Now, when you come to the spreads and NIMs on the bank products that we have rolled out. See, we are one microfinance which is now contributing around 27-28% to our total book. So balance 72% comes from non-microfinance, and out of this 72%, commercial vehicle, used commercial vehicle, which we have been doing for about 7 years now, from 2011, the used commercial contributes another about 26-27%. The micro tiny enterprise loans, which is less than 10 lakh rupee loans that we give for very small tiny enterprise, that's again a book we have been building over the last 6 years from 2012, and that contributes another about 30% to our total book. The new product that we have introduced after becoming a bank is our MSC product, that's micro and small enterprise product, which is the only product we have recently introduced, which is addressing segments where other banks are also having a role or a play in the market. These are loans of 10-20 lakhs to up to 1 crore. That's the kind of companies that we look for. And in that segment, of course, there are other banks. Some of the customers have already got a limit. They might switch to us, or someone is coming to us for the first time. So that's the only segment where we see any competition from other banks. But the other products which I had mentioned, used commercial or the under 10 lakh tiny enterprise loans, frankly, in the last 6-7 years, as per our own experience, anywhere between 80-90% of our borrowers are first time coming to a bank. They've not had an experience with dealing with a bank any time in the past.
Fair point.
So the segments that we deal with continue to be segments which are significantly high on demand, but not enough supply from the banking sector.
Okay.
So the NIM we don't see as a major constraint in terms of holding on to the NIM even in the non-MFI products.